And I want to start with a quick thank you to Warren and Rebecca and Haley for your work to organize this second summit. We're happy to be back, and we're very happy to have the participants joining us today for our panel, Investing in Natural Forests. And I'm sure there's at least a couple of folks out there who are thinking, are all forests natural? So we'll start with a definition that for the purposes of this panel, when we talk about natural forests, we're talking about those that have a diversity of tree species, that are a full range of age classes, that are going on complex landscapes with a variety of site conditions. And those forests are typically managed using a process called natural regeneration. And that's a harvesting technique that allows the manager to capture timber value while also promoting the growth of new seedlings without mechanical intervention, and also promoting the growth of remaining trees as well. So natural forests have some pretty interesting investment characteristics and considerations. And one of those is, and perhaps foremost top of mind for a lot of the participants today, is that it is a significant, natural forests are a significant carbon store and a source of potential carbon sequestration in the future. And for that reason, today's panel is going to focus on natural forests as a large-scale investable asset that is also a leading natural climate solution, something you've already heard a lot about. We're also going to talk about and consider the potential for forest carbon markets and their growth to fuel financing for natural forests. And we're also going to discuss institutional asset owner perspectives on natural forests and natural climate solutions. So we've got a really full agenda today and lots to cover. And we're going to start with just a round of introductions to the great panel. Thank you all for your time to join us today too. I'll have a couple of questions for these guys, and then we'll start with the discussion. And we want this to be as lively as possible, so please use the chat box as frequently as strikes your fancy. And I'll kick off the introductions. My name is Tommie Elder, and I'm the Director of Investor Relations for the Forestland Group. And I focus on product development, outreach to new partners, managing existing relationships, and our impact portfolio. And the Forestland Group, for those who aren't familiar, it's a 25-year-old timberland investment manager, and we focus on natural forests to create economic and ecological value. We have about 1.7 billion assets under management, and a little that's spread over a little under 2 million acres in the US, Canada, Costa Rica, and Panama. The Forestland Group has about 15 years in third-party certification experience across our entire ownership, and 17 and counting forest carbon projects. So the growth in the carbon markets, we're going to be very interested to hear what Nico has to say. And we've got a lot of great expertise on this panel, whether it be silviculture or climate science or carbon markets or timberland investing. I know it's going to be a really interesting discussion. So let's meet the panelists, and we'll start with Bronson.
Hi, Bronson Griscom. I'm Senior Director of Natural Climate Solutions at Conservation International. I'm a forest ecologist by training. And my work is, I'd say there's sort of two dimensions of it. One is looking at sort of global potential of different forms of natural climate solutions. And the other is working on tools, I'd say sort of scientific and technical tools that would allow us to unlock and invest in specific natural climate solutions in specific places. Great to be here.
Thanks, Bronson. Nico, would you like to go next?
Sure. Thanks a lot for the invitation. So my name is Nico Girod. I co-founded a company called Clear Blue Markets, and we specialize in working with carbon markets, compliance, but also voluntary markets. And we help emitters, large emitters, buying those credits, but also offset developers monetizing those credits and helping them with the monetization strategy and to have an overall view on the carbon market. And we're based in Toronto. We have also an office in Amsterdam.
Thanks, Nico. Alex, would you go next?
Hi everyone. I'm Alex Finkral. I'm the Chief Forester and Vice President for Conservation with the Forestland Group. We're based in Chapel Hill, North Carolina in the United States. And Tommie gave a pretty good overview of who we are and what we do, but I'll just reiterate that we really focus on natural forest management typically in broadleaf forests in North America and Central America. And I've been doing that for over 25 years now in a lot of experience with timber and carbon and other revenue streams and other ecological outcomes. And we'll share some of that in this session. So thanks again.
Thanks, Alex. Tracy.
Hi, good morning, good afternoon to everyone. I am with Timberlink, and we are an Atlanta-based advisory firm. We advise clients, institutional investors primarily, on their timberland portfolios only. So we're a bit unique and bespoke in our services. But I individually have been in the timberland investing space for over 30 years now, which is a little hard to say. And very excited to be here and be a participant on this panel.
Thanks, and we're excited to have all four of you. So with that, let's get the conversation started. And Bronson, would love to kick off with you and just a question to get us all oriented. And that's, in your perspective, how can improved forest management contribute to natural climate solutions?
Fabulous, Tommie. I'm going to share my screen, or at least attempt to, and as by way of a little bit of a graphic or two to help out here. Okay, so to answer your question, before diving into the specific question of natural forest management, I thought I'd just give an overview of the overall story of what we call natural climate solutions, or just the potential for improved land stewardship of any type to contribute to climate mitigation. So we've done a variety of studies, myself and many others, that have asked this question: what is the scale of climate mitigation contribution? We think it's somewhere above about 10 billion tons of CO2 per year. That's after including cost constraints and safeguards for food security and other things. There are three main categories. I think a lot of people have sort of a certain specific idea of what of sort of how nature can contribute to climate mitigation. And part of what I want to do here is talk about the diversity of options, right? So there's a lot of different things that can be done. Three main categories I like to talk about are protecting forests and other ecosystems from being lost or converted to other land uses, which generates an emission, and that can be avoided if we protect these systems. At the other end of the spectrum, we can essentially re-expand the cover of native ecosystems. And then there's a big category, which actually is the biggest sort of in terms of the amount of climate mitigation potential, which is to improve management of working land. So we're really talking about climate smart forestry and climate smart agricultural and grazing systems. Okay, so obviously the topic here is improved management of forests, but I'm going to speak to that in a moment and sort of unpackage that a little bit. But keeping in mind that what I find so interesting and so exciting about improved management of forests is not just the improved management of those forests themselves to essentially increase carbon dioxide, which of course it is, but it's also as stewards of those forests, and sustainable forest management can avoid the conversion to other land uses, right? So essentially, if we have a good business model and healthy forests that are generating some kind of return, that can reduce the likelihood that will be converted to some other land use. And of course, for better forest management can do the opposite, can actually re-expand forest cover. So it's one of those spaces where it really involves all these three major aspects of natural climate solutions. And what I want to do is now unpackage and focus a little bit on the better management of timberlands, right? This improved forest management itself. So forests that are remaining forests, the two in the middle here. So one of the things that can be done is to essentially avoid forest degradation, which is an avoided emission, excuse me. There's essentially a verification methodology we've developed called reduced impact logging for carbon. And that is to avoid essentially collateral damage to the residual stand when harvesting in a selection type of harvest system, which is the predominant system in the tropics, and it is also prevalent in sort of diverse temperate hardwood forests, like in the U.S., where, for example, I know Alex and Tommie, TFG works. And then there's various opportunities to enhance the growth of forests. For example, by management of competing vegetation in the tropics. There's a lot of superabundance of vines because of essentially bad management, and we can thin vines. This is just one example, but we think it's a pretty big opportunity to actually enhance growth between harvests. All right, I'll stop there. Just as sort of a teaser as a basis for questions moving forward. Back to you, Tommie.
Thanks so much, Bronson. And Nico, let's turn to you and thinking about these natural climate solutions and thinking about natural forests as a leading natural climate solution. Carbon markets represent an opportunity to get some of that financed and paid for. Would love to hear your perspective on what's going on with these markets now and where you see future growth.
Yeah, thanks, Tommie. So yeah, certainly a lot of excitement in the carbon markets these days. As I mentioned, we do specialize in compliance, but also voluntary markets. And I would say until 3 years ago, most of our work was really in compliance markets. And when you talk about compliance markets in North America, you're mostly talking about the California, Quebec, WCI market, and that was driving a lot of the demand for carbon offsets, especially those improved forest management type of projects. So that was giving a proper price signal for those type of projects, and a ton of CO2 there would trade around $15 a ton essentially, which was giving a proper incentive. But what we've seen in the past 3 years is really the emergence of the voluntary market. While we have seen and we are expecting that the demand from compliance market will reduce in the coming years because of changes in California on the offset quota for industrials, we are seeing the emergence of voluntary market. And I did have a few slides here to present to explain you a bit more what we are seeing now in the voluntary markets. So as mentioned, I mean, in the past, prices were pretty depressed in those markets, and what we would normally see were prices sub $10, below $10. And so a lot of those projects would go to compliance markets where they could fetch up to $15 a ton of CO2 equivalent. But that has changed actually in the past year, where what you see here on this chart, seems a bit complicated, but essentially what we do in the voluntary market is we differentiate the type of projects based on some of their attributes, essentially looking at are they removal type of projects or avoidance type of projects. And then when we look at avoidance, we see some of those projects being a higher quality than others. And what we have seen is really a big drive towards nature-based solution type of offsets. On one side, you have a lot of projects for avoided deforestation in South, for example, and on the other side, there's also a big focus on removal type offsets. Interestingly as well, for improved forest management projects, they tend to sit in the middle between those two type of offsets, so between removal and avoidance. And depending on the projects, they can be seen as both. But essentially what we are seeing is that in the past year, prices have more than doubled, and today an offset in the voluntary market trades as high as in the compliance market, which is something unheard of and that we've never seen in the past. And actually here, just to show you as well, what is driving this interest is the fact that there's more and more investors coming into the market, from banks to traders, that are more and more interested in those markets, because a lot of companies are claiming or saying that they will go carbon neutral. And as part of the solution, or as part of going carbon neutral, a lot of them plan to use offsets. And what you see here on this chart are two different contracts. One is for a natural-based type of offsets, the NGO contract, where where you can like get up to $13 today for a ton of CO2 in the voluntary market. That's for really avoidance or natural-based type of offsets. But you can also get up to $8 in for projects that are avoidance type of projects or reduction like renewable energy. So there's been a big emergence. You can see here at the start of the year, prices were below $2. Today, we see prices that are between $8 and $12. So a lot of interest, a lot of new players coming into the market. And that is really driving the demand at the moment. And what is really driving that is the expectation that there's going to be a lot of demand from industrials and corporate in general to use those offsets. So I'll just, pause here. It's probably a lot of information and a lot of charts.
Thanks so much, Nico. The visuals are so helpful. Really appreciate that. And I would like to go to Alex and hear a little bit more about the scale of potential investment opportunity in natural forests.
Yeah, thanks, Tommie. I'll start sort of big picture with describing the Earth, which a lot of people who are attending the meeting today, may think that forests are everywhere, and they are. But we'll start with the idea that only a third of the Earth's surface is actually land. And these are basic ideas many people know. About 2/3 of the Earth is water. And of that 1/3 that's land, only about 1/3 of that is forests globally. And yet that's 10 billion acres or about 4 billion hectares, which, that's a heck of a lot of land. But then you break that down by ownership type, and about 77% of the world's forests are government owned and government managed in various ways. About 11% are managed and owned by communities, and about 12% of the world's forests are privately owned. So about 1.2 billion acres, which, as Tommie's question indicates, is a huge opportunity for investment. Now, someone does own these, groups or people own these forests as they exist now. But it's only really been in recent decades that these forests have been approached as investments. Where is the private land, which is typically more conducive for investment versus public land or publicly managed forests? It varies by country. And so the United States, for example, has a relatively high rate of private ownership. About 56% of US forests are privately owned, compared to Canada, just next door, which has a massive amount of forest land, 94% of which is government owned. So only about 6% private ownership in Canada. That doesn't mean that there are not opportunities for private investment in public forests. And Canada is another very good example of this, where the vast majority of Canada's forest land is leased in long-term leases or concessions. And that's true in many other countries as well, particularly in tropical countries where you see management concessions or timber harvesting concessions, which are private entities that have long-term leases to manage forests for different outcomes. So again, just to think big picture, there are private forests that can be bought and sold and managed for different revenue streams, and government forests that can be leased, public forests that can be leased and invested in different ways there. Well, what are some fundamental investment considerations for for forest land investments? Number one is land value appreciation. If you own the forest, it's what we sometimes call dirt value. Is there appreciation from year to year in just the bare land value of forests? In a lot of places, the answer is yes, and that's cyclical, of course, from year to year and decade to decade. Number two would be timber. And timber is still probably the primary driver in forest valuation, especially in concessions and places where long-term leases are really only about timber management, not land ownership. So timber is a big one. Carbon, as a number three, is coming on really, really fast as a driver of valuation just in the last year. But really over the last decade, we've seen rapid growth in interest in forest carbon as a means of mitigating climate change and deriving value or generating value from an investment standpoint. And then there are all kinds of other sort of revenue streams like leases and royalties and recreational types of hunting leases, sale of easements, including conservation easements. But what we're finding right now is that timber and carbon are highly compatible in natural forest systems, that you have forests on larger scales with diverse species and diverse sites where there can be a mixture of timber harvesting to provide goods and services that are, fairly conventional, paper and wood, for example, but with an overlay of carbon sequestration through improved forest management projects that generate revenue streams that are annual, and you have that optionality between the two revenue streams. You can harvest more or harvest less in a given year while sequestering carbon in the forest acres where you're not harvesting. Maybe a bit later, I'll get into some kind of examples that would demonstrate the scale of these kinds of investments. But for now, I'll leave it there as a sort of big picture description of the investment space.
Helpful. And following that description of the investment space, Tracy, we'd love to hear more from your work with Timberlink. How do asset owners really think about natural forests as a potential investment, and how do they think about natural climate solutions as well?
Sure, I'd be happy to talk about that. So let me start with a little background. Really, beginning in around 2007, 2008 was when we started to see a lot of interest in the broader concepts of ESG coming from our investor base. I don't think this was coincidental to happen alongside the effects of the global financial crisis, as investors were starting to rethink portfolio construction and also to reassess their risk. From that point, we did not really have good metrics, however, when it came to these timberland portfolios on how to implement various ESG concepts within an institutional timberland portfolio. I will say also that in the early days and still today, European investors, as driven by their constituencies, were absolutely the first adopters and the most prevalent that we saw with interest in implementing an ESG plan or ESG principles within their timberland portfolio. Well, so fast forward to today, and a lot has happened. If I could make a little aside here, there's a famous movie from the 60s here in the US called The Graduate. And in that movie, there's a classic scene where Mr. McGuire takes aside the graduate, Dustin Hoffman's character, and says, "I just have one word for you, plastic." Well, in our investment day, that word is carbon, no doubt. It has definitely become the hot topic for institutional investors considering their forests. And I'm going to get into that in a minute. But so let's talk about how it's changed from what I've set up in the past. Now we're seeing that almost all TIMOs do provide ESG reporting, usually through the form of a sustainability report, usually with metrics. And the interesting thing here is carbon provided one of the best platforms for quantifying. As I mentioned before, it was very difficult to quantify some of these aspects in the earlier days. And there was a lot of discussion in our industry about how do you really capture what we know to be very sustainable concepts within timberland portfolios. Well, carbon has given us a very clear and firm foundation to generate metrics, and most managers are doing that. So what are investors doing when it comes to carbon in their portfolios? And I know we'll get into this in the questions later, but primarily we are seeing two avenues for employing carbon. One is probably the most common to date, which is carbon projects. They are implementing and establishing carbon offset projects on their timberlands and then monetizing those credits or selling those credits, which serves as an additional revenue stream, as Alex has already discussed. The second option that's newer, and I think we're going to see a lot more of, is investors who are either acquiring forests or using the forests that they already own to help offset their own emissions. And by this, keep in mind that my base of clients is institutional investors. So this would include clients who perhaps have investments in other portfolios or other allocations within their pension fund that in order to meet their net zero commitment, they need to offset. So we have several investors who are looking at forestry investments as a way to help meet those offsets. That's something that I call insetting. And I know insetting is another term within the carbon world as well. But within the investment strategy concept, we refer to that as insetting as well, because these investors, as opposed to monetizing those credits, are looking to retain them themselves. Now, as far as natural forests go, oh, one more comment I forgot here. We are seeing, and I believe Bronson mentioned this as well as Alex, we are seeing a lot more US involvement. I mentioned earlier that European investors were absolutely the first adopters and pioneers in this field, but US corporates tend to be the bulk of participants from our view. We are not seeing a lot of US institutional investors moving into carbon overlays on their timber portfolios, but we don't think that's far behind. Again, what we are seeing is US corporates looking to invest in forests for their own offset purposes or to monetize. Okay, so let's talk about natural forests. Nicolas, if you would not mind sharing my slide. I've asked for help from my co-panelists here because I'm having technical difficulties. What Nicolas is going to pull up is a very simple chart just showing the makeup of natural forests, or as I've categorized hardwood regions in the US, as a mix in current US timber portfolios. So what this chart shows is data from Timberlink's survey. We collect data twice a year from a core group of US-based TIMOs and measure assets under management. This reflects acres. And to the far right is the most current update, which was mid-year 2021. And you can see that the top green layer, which represents the hardwood regions of the Northeast and the Lake States and Appalachia, which is northern end of the southern region and is primarily hardwoods, that we have seen some increases over the 15 years of our survey in the mix of assets under management and acres under management comprised of hardwood or natural forests. What we expect to see, and Nico, that's fine, you can unshare the screen. What we do expect to see going forward is an increase. And so from an investment perspective, one of the benefits of natural forests is the things Tommie and Alex have mentioned. They capture carbon well. But from an investment perspective, there's also typically a smaller size of transaction in that space, which means there's more transaction activity, which is great because investors have had a challenge getting capital placed in the last few years with a restricted transaction flow. Interestingly, we are seeing more transactions in these regions recently, which I think just supports my comments. It's also, again, just a good fit for timber portfolios in general from a diversification perspective, which have primarily been focused on plantations, but the natural forests provide a good balance, both regionally and in cash flows. Now, the last thing I want to touch on real quickly before we move on to questions is some specific considerations for institutional investors when it comes to these carbon overlays. One discussion that we have quite frequently is, should a carbon overlay within a timber portfolio be considered a multi-asset portfolio? And by that, I mean, are we just investing in timber anymore, or does carbon represent its own investment stream? I think the answer is obviously yes, carbon does perform differently when forecast on a long-term basis. And it does have some impact to a degree on the forest management plan. So it does impact the timberland returns. But usually the good news is this is in a positive way, particularly when it comes to natural forests. One thing we also consider is at some point in some of these regions and for some properties, might carbon become the highest and best use for some of these forests? We're capturing carbon we're capturing carbon becomes more important than the fiber production in the forest. And of course, that's a function of what carbon prices do in the future. And some of these forecasts indicate we may see that on certain properties, not all. Some other considerations for investors. I think the most important one we see as a concern from investors is headline risk. And this can either have positive or negative connotations. From a positive standpoint, investors love the story of timber. It's obviously a very sustainable asset with very strong ESG principles, as I've already covered. But from a negative standpoint, some of the headline risks include items that have been in the press lately about carbon projects, particularly here in the US, and meeting the additionality and permanence characteristics that are so important for carbon projects. Couple of last points on the negative. I think that one of the things that we need to really sink in for the institutional investment community is better standards. And by that, I mean best practices for how to account for the carbon in a financial standpoint on the balance sheet, as well as to value it. And also how to measure things like end use, finished wood products capture. That would really benefit institutional investors to help them avoid some of these headline risks we've talked about. The last thing is a very positive. We see investors recognizing that not only do forests provide a lot of good potential for the carbon capture, but any number of environmental benefits that have not yet been monetized that we believe are soon to come. Things like water rights, air quality, and other things. So that's a lot, and I'm sure we'll get into some more of these items in the questions, but I'll turn it back to you, Tommie.
Thank you so much, Tracy. And I think that you absolutely hit on an area where natural forests really stand out, which is in the delivery of those conservation co-benefits. And you also touched a little bit on the difference between plantation and natural forest investment opportunities and how asset owners kind of think of those two opportunities within their portfolio construction. And it ties to the question from Bill Morris, actually, about the premium for removal credits, and does that make sense? And isn't it better to avoid? And what that does is hit right to the question of, what's the difference in investing in plantations and investing in natural forests from a carbon perspective. And Nico, I'd love to start with you and just have this be an open discussion for the whole panel to talk about kind of from a climate or financial or a management perspective, really drill down into these differences for the audience.
Sure, yeah. No, it's a great question, and maybe just to also put that into context, today, if you look at the data in the main registries, last year there were around 200 million credits that were issued, roughly, and out of these 200 million, around 5% were removal type credits, mostly afforestation, reforestation type of projects. So it's a very small part of the supply in the overall market today, and therefore, there isn't much supply. And actually, what we're seeing indeed is that there's a lot of our customers are focusing only on removal and only want to buy removal, and because of that, well, we're seeing quite a premium for removal credits. Does it make sense or not? In our opinion, we do think that before removing, we need to avoid or reduce all emissions we can. So we rather tell our clients to buy avoidance type of projects at the moment. However, some clients are very strong and want to only focus on the removal. And I think it has to do, for example, with some of the, for example, science-based target that tells you that if you want to be able to claim that you're net zero, you need to remove the remaining CO2 from the atmosphere. So there's a few different reasons why people are really focusing on removal, which we don't always think makes sense. However, because of that, we are seeing a premium, and I think it will continue in the future. Really, that's what we see in the market today.
Mm-hmm. And the question about, if we are trying to meet these net zero targets and we're focusing on removing, but we aren't avoiding, then we find ourselves in a similar predicament. Alex, would love to turn to you and maybe hear a little bit about how improved forest management, carbon credits, are, just speak to the credibility of them. We've heard a lot in the news about the permanence and additionality aspects, and how do we at the Forestland Group ensure that we deliver on those fronts in spades?
And I'm sorry, Tommie, that was for me, you said?
It is, yes.
Okay, yeah, I missed a little bit. So, and I think I heard the question was, how are IFM credits permanent
and additional? Yes.
Okay, yeah, great. Yeah, well, in our experience, which has been exclusively on private land that was owned fee simple, private owners in the United States have a lot of options or a lot of freedom to do with their land what they'd like to. And so forest carbon projects serve as an encumbrance on a property, limiting what you can do to some extent. So the additionality to me is obvious because it is you're harvesting less to sequester more carbon is the additionality. You have taken away the option of harvesting the existing carbon in extant forest, and going forward you have a lot of flexibility in harvesting or not harvesting, but there's no free lunch. It's one or the other, and that to me is the additionality. As far as permanence, I mean, these are 40-year projects in voluntary markets, or 100-year projects in compliance, the California compliance market, which, from a human lifespan perspective is a long, long time. I mean, these are investment scales that are much longer than I think anything else that we know of.
Tommie, I could just add just a sort of a biological comment onto Alex's point. I think because there is I feel like there's a lot of confusion around the question of permanence. Because we think of a tree and we're like, well, a tree, we read in the news every day that a hurricane comes and knocks down trees and fires come and burn trees. And, how is that permanent to store carbon in trees? So my answer to that is that it's a scale question. Is that so? There are virtually no projects that I know of where we're talking about either restoring or protecting or improving the management of an individual tree. It's all about getting to a certain scale where you have a lot of trees and you expect some turnover of individual trees, but at a certain scale, and essentially as we increase in scale of any of these things, right, whether it's the restoration or protection, our permanence improves, generally speaking. Now in some landscapes more than others, right? If you're in a certain landscape where you're really seeing a kind of shift and a lot of sort of increased fire threats and this kind of thing, then you do have, you should be thinking about, like, okay, is there kind of a landscape level permanence issue? We read a lot about that in the news, but most landscapes are not at that sort of some kind of shift threshold, right? Most of them are, and in fact, most of them are the reverse. Actually, climate change is actually causing them to store more carbon, which we don't hear about too much. But I just want to point that out, is that as we get to bigger and bigger scales, the permanent story recedes as a kind of existential concern, in my opinion. And there's obviously more to it than that, but just want to flag that conceptual issue.
That's really helpful, Bronson. And I'd love to turn to some of these great audience questions that are coming in, and please continue to submit them. So we heard from Brandon, does a carbon overlay add expected return to a timber or forest asset, or does it neutralize the expected returns? And Tracy, we know that you look at a lot of new products, and are you seeing a jump in timber concepts or timber funds that have a carbon focus in terms of expected returns? And do you think it's realistic?
Yeah, those are great questions. And I also see there's another audience question from Alexandra that's very similar to, if I could kind of blend those answers. She asked about the difference in the appetite between natural and plantation. So that's a very good overlay to the question that I'm going to interpret from Brandon as the trade-offs. We did not talk about that, but clear and forefront on any investor's mind is, what are the costs associated with implementing such a program? We definitely do see that in some regions, some properties, and some forests, a carbon overlay makes sense and it's additive to overall return, no question. And I will say very broadly and very generally, at the risk of getting in trouble with some of the co-panelists here, you definitely see that more often with a natural forest. And I'm going to speak specifically to US-based natural forests here for a moment. As contrasted with plantations, which in the US are typically the majority, southern yellow pine plantations, as well as the Pacific Northwest, a much smaller percentage of land base that's dug fir plantations. It's more difficult, quite honestly, in the current construct, in the current regulatory environment, to implement a carbon project on a plantation. So natural forests are where we are focused at the moment when working with investors, both on establishing projects, as well as looking at the long-term benefit. So clearly these regions that I've already pointed out, which are comprised of more natural and hardwood mixed forests, they make it a lot easier to consider these trade-offs because you have longer rotation ages than with a pine-based plantation. The harvesting practices are different in that it's not as typical to do a standard thinning and then a clear cut at maturity. You're harvesting various species at various times. So changing up these regimes is much easier to do, and it makes more sense in these natural forest projects that we've looked at and analyzed. So I think the bottom line is, again, it depends on the forest, it depends on the project, but absolutely we do see that it's additive. And again, bottom line, it's usually much more successful in implementing it on a natural and hardwood forest currently.
Thanks, Tracy. And I'd like to now transition to the question from Andre about credit prices increasing, and a lot of the drivers of these credit price increases or projected increases are maybe things that have been in play for a while now, and why is it different now? And perhaps Nico and Bronson, with your experience with working with corporates and others, we could speak to that question.
It's a great question, and I have to say I was one of the first surprised to see how the market turned so quickly in the past 2 years. In the past, historically, we never really got involved so much in the voluntary market until 2 or 3 years ago, where we saw a big switch, and that was pre-COVID. But with COVID, things have accelerated even more, I would say. And I think what's really driving the difference here is all those companies pledging to go carbon neutral or be net zero by a certain date. That is really, on a daily basis, we see a new company saying that. And I think that's what's really driving the long-term demand. And eventually, after they pledge to go carbon neutral, they end up talking to us or other consultants on how can they go carbon neutral on reducing their own emissions, but also then using offsets eventually. So we really saw a big switch. I think 2021, if I was to come back on the year, was the year where we saw commodity traders getting involved in this market. A lot of, there's always a lot of discussions on those carbon neutral type of transactions that we've seen, for example, on LNG or other fuels that were sold bundled with offsets. However, we've seen that driving a lot of the demand this year, and it seems like all those traders, commodity traders, and also miners are also setting up a carbon desk or planning really to invest in the long run in those projects, and also to be able to bundle those type of product they sell with carbon. So it seems to be a long-term trend that is here to stay, and there's a lot of investment going on. 5 years ago, it was difficult to find a job as a carbon trader. And today, every large company is essentially looking for a carbon trader. That's what we see, at least. So there's a massive change in what we've seen in the market, really.
Mm-hmm.
Well, I think Nicolas is certainly more qualified than me to speak to this question, but I've been in the space long enough as a scientist just to make some really generic observations. And again, it's just an opinion. But my observation is that there have been, I'm sorry, I've just lost my train of thought. come back to me.
I promise I will, Bronson. You are not on
It was
the hook
clearly
yet.
a brilliant insight.
I was excited about it, but I'm sure we'll hear it later, or we'll hear a brilliant insight about something else. So we received a great question from the audience about how much can you put to work in natural forest? How much investment is can you put to work in a natural forest strategy? And Alex, I'd love to turn this question to you, and perhaps you can just describe an example project or an example investment in natural forests, and what does it look like, and break down kind of the carbon and the timber aspects. We'd love to hear more.
Well, we've been in the business long enough that we have good examples and bad examples of how this is done. I'll share a good example first, and then maybe a less good example, neither of which are disasters. But one really great story that kind of showcases all of the potential in this area was a property that we bought in 2003 in northern Michigan, up on the close to the Canadian border, and it was 390,000 acres. That's large. When you get into hundreds of thousands of acres, that's a relatively large forest investment. Small end of the range is probably for institutional investors is probably 5,000 acres, maybe 10,000 acres is kind of down at the smaller end of the range. We quickly sold 23,000 of those acres to the Nature Conservancy, a large conservation organization, for permanent protection. We then sold a working forest conservation easement to the state of Michigan. Now, working forest conservation easements allow continued timber harvest at a sustainable level. And I won't go into detail about forest certification, but often these types of easements require compliance with FSC certification, the Forest Stewardship Council certification, as was the case with this one. But it's important for what's coming next to realize that there can still be plenty of timber harvest. The annual growth of timber can be harvested in these kind of easements, but no development. So keeping forest as forest. And the sale of that easement represented about 36% of the purchase price of the property, which we got back right away. Then in 2014, we developed an IFM carbon offset project through California's ARB program. And on the easement acres, the 220,000 acres, and sold 1.7 million tons in the first year at a price that represented about 10% of the purchase price of the property, and then sold the property to another large institutional investor in 2016. So conservation easement, a conservation out sale, a carbon project, it was sort of like a good case scenario for all of these things, with an IRR that was nearing a 10% when you included all the different revenue streams that were available there. But it was that optionality of still having timber harvest available that allowed us to do the IFM project, which then affected the volume of timber being harvested there in a year. And that went on long enough that I'll stop there. But if anyone's interested in more examples of these kinds internationally and domestically, we can follow up on that some other time.
Thanks, Alex. And we just received a question from the audience. Bronson.
I'll just quickly, sorry for the train of thought trigger. So the general observation I wanted to make following on Nico's response is that it seems to me that that for many years, the private sector has been waiting for essentially a grand policy solution to kind of that the sort of investment sector kind of dock into and then sort of solve the sort of the map of the way forward, and that had not happened. And again, I'm not qualified here, but this is just a very general. And I think so essentially for political reasons, both in the U.S. and other countries, there was a sense of this is. But then at the same time, there's a lot of increasing concern about climate change. So I think there was this disconnect between kind of the political solutions and the sense of urgency of doing something. And I think the private sector finally was like, we got to actually start to move. Like, we can't just wait until there's resolution of sort of a grand kind of political solution to climate change. And we need to sort of dive in and invest in the space, because it's going to change quickly, and we don't want to be caught kind of out in the cold, in the sense of being, in the space. So that, again, very, very general observation, but I do think, big picture is that I'm bullish on climate change. Like we all see it, right? It's not going away. And one way or another, I think it's pretty clear to me, it seems to me that there is going to be an increasing value on carbon.
And Bronson, thinking about specifically that this isn't going away, and Alex has just mentioned, pretty exciting investment opportunities in natural forests in terms of financial performance. But thinking from the carbon perspective, we got a great question from the audience here. From your experience on an acre by acre basis, if an investor is thinking about making an investment for climate change mitigation purposes, specifically as the driver, why would they look to natural forests over plantations? Where can you get the biggest carbon outcomes?
Gosh, yeah, I don't know if I should defer to somebody else on this one. I mean, my feeling is this, like, I sort of try to avoid sort of, like an either or. My own feeling is that we need to do all of these things, right? We want to, there are ways of improving management of plantation forestry systems. That, for example, siting, I would say siting is a big one, especially in the tropics, right? So plantation forestry is one of the biggest drivers of deforestation in Indonesia and a lot of Southeast Asia places. Not so much, I don't think as much in the Brazilian kind of Amazon region. But there are certain places where good siting of plantations can kind of not only avoid deforestation, but also enhance the extent of forest cover, right? So you can turn it into a loss of native cover, which tends to have more carbon. Instead of doing that, you're actually expanding, what is non-native forest cover, but that's still more carbon. So that's an example of like, hey, some group, large groups of folks should focus on those sorts of solutions. What I will say about natural forest management, I think is echoing others on the panel, is that there are just a lot more forests that are in natural species forests, natural regenerating forests that are being managed for timber, just in terms of extent, far more forests in that form of management than there are plantation forests. And I would say the business model is not as tight in natural forest management, right? There are more options as to how do you manage natural forests to generate returns. And to me, that is one of the reasons why there are more opportunities. I think, to Tracy's point. So that's a thought.
Yeah, thanks, Bronson. Go ahead, Tracy.
If I could pick up on that, I want to make a couple of points about the return outlook. So, when we consider from an institutional investment standpoint, again, which is my focus, what does this portfolio look like going forward? Even at the base case assumptions, there is some trade-off in return, but we are still seeing that the general going concern rate, which is somewhere around 5% real in an assumption for a timber institutional investment, can still be met. What is really interesting is the go forward when you look at some more, I don't want to say aggressive, but more likely, honestly, scenarios with what carbon pricing is likely to do in the future. Per Nico's excellent charts and comments, we've already seen quite interesting upticks in even voluntary pricing, which a lot of investors have avoided, quite honestly, because it wasn't worth the per ton yield on selling carbon into those markets. This just opens up a whole new avenue of pricing, expectations, and returns. So again, I want to emphasize, the base case is still pretty solid when you're talking about a carbon overlay that makes sense on your property. But then when you look at some of these more realistic and likely cases, we are talking about some strong additive. And that gets back to the comment I made earlier about, what we're really starting to discuss is, are we looking at a future where the highest and best use of that property might become carbon sequestration and capture? And I think that has some real world implications. I don't mean to sound alarm bells about that, because I think there will still be clearly properties that generate the fiber that's needed particularly as we see an increase in demand for mass timber, which is another climate solution based in the forest. So, we have a lot of trade-offs to look at going forward. But when you come right back to today, they all look very positive for forests, especially natural forests.
Thanks, Tracy. And we have a couple more minutes. And Alex would love to hear from you. Where do you think the Forestland group is going, given all these considerations and the go forward that Tracy and Bronson have highlighted? What's next?
Yeah, and I agree with what everyone has said thus far and what Tracy just said about carbon prices, and Nicolas said earlier about carbon prices going up. I think there was a question earlier about why do we feel so optimistic about this? And some of us here have been watching the evolution of carbon from a market standpoint for 15 years or more, and have rode the doldrums. But it seems to me, and I'm getting back to your question, Tommie, but it seems to me that the carbon interest in carbon and the sort of parallel pricing increases that we're seeing are finally catching up to a reality. But as Nicolas said too, in the last 2 years, I would have said the last 6 to 12 months, the market is speaking and loudly with how the curve is sort of going vertical on carbon pricing, and sort of things that we didn't think would be happening now are happening now. So that ties into what the Forestland Group is interested in doing, and we're doubling down on our carbon investments in natural forests in North America and elsewhere, as we're beginning to look at opportunities in different places, particularly the tropics, where we feel like, from a conservation standpoint, there's nowhere more important to focus on the maintenance of natural forests or keeping natural forests intact. So that's probably doing a lot of what we've been doing, but refining our plan based on our experience is sort of an adaptive management strategy that has served us well thus far.
Thanks, Alex. And Nico, would love to turn to you. And there was a question here that I think we missed about how do we expect the recent decisions at COP26 to impact the voluntary market, and bringing the potential to bring more projects into the compliance market. Kind of taking a step back at a high level, what do you think we're gonna see in response to some of the recent sort of big policy moves at a global scale?
So yeah, there's a lot that came out of it, and yeah, we still need to digest all this information. However, what we've seen, and that was the expectation, is that prices have reacted positively in all carbon markets after the COP. If you look at the European carbon prices, they're at the all-time high today, above 67 euros. If you look at voluntary offset prices as well, are at all-time high, even though there's not that much history. But the market is really very positive on the outcome of the COP. The way we see it on our side is, to come back to some of the comments from Bronson as well and Tracy, is the only reason why we have a voluntary market today is that there's no compliance market or strong compliance market. If there was a compliance market, then you wouldn't need a voluntary market. But the way we see it as well in terms of investment is, if you look at in the long run, is you should look at it as, in a worst case scenario, your carbon offset will end up in a voluntary market. In the best case scenario, you go into a compliance market, and then instead of having the $10, $15, $20 that you can get today, then you'll get $65, $70, even maybe $100 a ton of CO2 in a few years' time. So that's really our outlook. And I think overall, like if you look at the COP and all the announcement, it's all very positive for carbon markets. It will take some time before we know how the details on how those different credit mechanisms are going to work. However, you might start seeing more different markets linking, for example, California and Europe maybe, or with China. So all those compliance markets are also growing a lot. You hear more countries starting carbon markets, such as I think I heard Indonesia this week. Brazil is looking also at carbon markets. So there's going to be a lot of different dynamic and interesting dynamic, I think, between compliance and voluntary. And in the longer run, the way I see it is that there should be a convergence between all those carbon markets to have a proper price incentive for people to reduce emissions, or companies to reduce emissions, but also to invest in sequestration type projects or avoided deforestation.
Thank you, Nico, and thank you so much, Tracy and Alex and Bronson and all the participants as well. Everybody played a role in making this a really interesting conversation, and I certainly learned a lot about how natural forests can deliver on climate mitigation and co-benefits and financial performance. And I think that we can all agree that between markets for carbon and timber, that this is a really exciting opportunity for natural forests as an asset class, and that on a global scale, that there's huge potential here along the lines of some of the opportunities that everybody mentioned today for investing in natural forests. And we hope to continue the conversation. So if there are any questions that we didn't get to, we'll be happy to do that during the coffee break or over email. And thank you so much for your time.